Hello, this is an important update I'd like to share with you. This is for New Zealand tax residency. I have done a lot of tax advisory work for tax residency, and we often have issues with that. Somewhere down the line, people in policy making have heard this change and they have made this change. What this change is, you like to know? Short-term visitor change. Be with me for next few minutes and I'll explain you what this change is about. So basically, this is effective from April 2026. So what's being changed? New rules are going to impact the visitors, and it applies to resident, non-resident, any kind of visitors who are visiting New Zealand, and the focus is on making more clarity for those people visiting our country. So we don't want them to be tied up with the existing rules of 183 days. You stay in the country, you become a tax resident. We're going to give them some leeway to come and work here, keep working in their overseas country while they're visiting here, so they don't get caught up into unnecessary become a New Zealand tax resident rule. So what are these changes and why are we changing? Basically, we're trying to reduce double non-taxation. We want to enable remote work in this country, and we want to maintain fairness and integrity in tax system. Right now it seems to be a bit unfair that if you spend a little bit of more time while you're visiting New Zealand, automatically you become a New Zealand tax resident. So as you know, the current tax rules, if you do not know, the current tax rules are permanent place of abode tax. So permanent place of abode means that I'm permanently attached to this country, even though mentally I'm attached here. I have more videos and article on this. If you're not sure, you can go and read about that. And 183 days in 12 months. So either PPOA or 183 days, either or will make you resident of this country from the date of your arrival. So what it means is you will be taxed on your worldwide income. Yes, that's correct. So whatever income that you're earning in your home country, whether rent income or any investment income, dividend income, interest income, any income, everything will be taxed in New Zealand. I have done a lot of work here. People are confused, but this is the current rules are. And the key changes, so basically introduction of non-resident visitor exemption for 183 days rule, extended stay allowed. So what we are saying is, if you have gone over 183 days, okay, you will not remain New Zealand tax resident as long as you're visiting our country and trying to stay here a little bit longer. You will be exempt from 183 days rule. You will be classified as non-resident visitor. So the rule is 275 days in 18 months. So if you spend less than that time, so do not go over 275 days, not continuous, even in broken periods as well, and you are a tax resident overseas. So there must be some country where you are a tax resident. It's not that you're not tax resident anywhere. You have not been a New Zealand tax resident previously and you're lawfully present here. You're not overstay. You got a working, you got a proper visa to stay. Then you will come into this criteria. Work restrictions, of course, cannot work for New Zealand employers, cannot serve New Zealand clients. However, yes, you can work remotely in your home country. If they have provided you some remote access, you can keep working for them and keep paying tax there. We got nothing to do with that income and that taxation, but you can remain here. For example, you have come here, you like this country, you like to stay here a little bit longer. Yes, you can, up to 275 days in 18 months period. That is the rule. So 275-day rule means maximum 275 days in 18 months, and you cannot breach this condition. If you do breach this condition, which means you have gone 276 days, then 183 days rule will apply and you will become a tax resident of New Zealand. So that's the rule. If that happen, exceed days, you lost the status, your unlawful presence, you lose overseas residency or breach work rules. So if any of these condition you breach, then that exemption will not apply. Let me repeat. If you're not a tax resident in overseas, if you start working somewhere for a New Zealand employer, or you are not a lawful person here, which means you breach your visa condition, then that thing will not apply. You will lose the exemption status and 183 days rule will apply back to you. Tax treatment after loss. So So prospectively you become the tax resident on the date of your arrival. Basically, that's the 183 days rule that will apply to you. Exclusion is basically short-term visitors, entertainers, sports person, because these guys are coming to make money in the country, so they are non-resident people who come for work purposes. So that's the rules are mainly for visitors. So these people are not part of this. Interactive rules, basically permanent abode still applies. So what we're trying to say here, the permanent place of abode, if you have PPOA, what this PPOA is, in basically if you're attached to the country, your family here, working here, somehow you're attached to it. It's a subjective test. Watch my other video on PPOA, then I can explaining. So that way you still a tax resident, then that 275 days exemption will not apply, because PPOA overrides 183 days rule, and 275 days is only related to 183 days rule. DTA relief is still possible. So double tax agreement, if we have a double tax agreement with that country, that is still possible. So that relief is not going away. If you have paid some tax there, we get a relief here. So even though we file tax return here, it doesn't mean we pay tax here, because tax is not double paid in that country. So benefits, it's mainly benefit to those people who like to stay longer. It's providing fairness and clarity. And if you're working remotely for overseas employer, it just gives you a little bit of more time to work for them, sort out your things before actually these rules come into picture. The risk is you don't want to breach those conditions. Those conditions I have mentioned. Make sure your immigration compliance is there and your work structure. So the way you're working remotely, that aligns with these rules as well. So that's the main thing. Conclusion, this is flexible, but there is a compliance needed, and it's important for remote workers and contractors. Thank you for watching this. Any question, reach out to us and support us. Thank you.